please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Midcap Radar. The market is down 85 points, which basically means we are almost back at the day's lowest point. And I think a little bit of slip has come in the last 5 or 7 minutes. I mean, as I was walking in, the Nifty was down about, 75, 76 points. So 10 points more in the last few minutes, very quickly. Midcap Index has been clearly at the low point of the day for a while and making newer lows at that. And the Nifty Bank is at the day low as well, 210 points down. Advanced decline looking terrible, 3.6 declines to each stock, which is actually rising. So, I mean, today is a complete washout red kind of day all across. With me is my colleague, Sumaira. Sumaira, afternoon.
Hi Prashant, good afternoon to you as well. Well, I can say that we can't blame Europe for the further nick which has come through. The FTSE has opened actually a tad bit weak, but the CAC looks okay. They've now aggravated the losses, so about 0.5% lower. So I guess I'll have to revise my statement. Maybe some bit of rub-off coming through from Europe, but it was by and large expected that global setup has been quite weak in any case. So some bit of a weak opening.
The sort of role as far as top headlines are concerned, let's bring in Ashwini Gujral as always. Ashwini, thanks very much for your time. Good to have you here. I mean, 81 points lower on the Nifty. Your thoughts?
See, today, large cap indices are outperforming the mid cap index. The mid cap index is down hardly 0.5%. So that way, the smaller stocks are not falling as much. And what I am watching out for is that, this global commodity sell-off is kind of bringing back buying into, the commodity sensitives which are languishing like, tires or oil marketing, even aviation. And maybe at some point it has a positive rub-off even on our financials. So that way, unless this becomes a global sell-off, which, where you keep going down day after day, my sense is that, second half, if Europe does not deteriorate a whole lot, you could actually take positives from the way markets have reacted. So I would think it's basically 5-6 stocks which are making the index look bad, because this was happening for the last 5-6 days, but the Nifty used to be higher. So given that, I don't think incrementally being short for the day is useful. I am long, and I'm long on stocks where, commodities, the lower prices of commodities have a good impact. So CEAT is a buy with a stop of 1820, target of 1865. KPIT, because the news which was perceived negative, the stock reacts positively. That's a buy with a stop of 217, target of 232. And Britannia is a buy with a stop of 4700, target of 4840.
You look at something like a Jet or something as well, as you were saying?
Absolutely. Why was Jet correcting for so many days? So if this is going to be an extended commodity slide, everything that takes in commodities will at least have a pullback rally, if nothing else. So till it becomes a kind of a global mini bear market, I think there will be things which will move higher as well. So people need to watch out for that.
Those with sort of who'd been trading these metals long, steel and non-steel names?
So obviously, if metals are coming off, then they may not outperform in this rally. So get into stuff where commodities are getting consumed for the next few days. If globally markets are going to remain choppy, or if commodities are going to come off, because we have been dealing with inflation issues, so that is supposed to be positive for us.
All right, Ashwini, thanks very much for your afternoon trades. Emami remains a stock in focus actually through the day today. The stock has extended losses post a conference call that the management had held, and the management not sounding very, very confident in the prospects ahead. Mangalam is here with the key takeaways. Mangalam.
That's right, Sumaira. So two things not working for Emami. The first one, that it had the impact of a low base, and despite that it failed to surprise the street. And secondly, it already enjoys the best EBITDA margins in the industry right now, already enjoys the best gross margins and spends the most in advertisements. So most of the levers for the company are already exercised. So the management going forward believes that those levers are not in their hands. So that's the word on the margins. They believe that the margin headroom is fairly limited. Of course, 35% EBITDA margin is what the company does, so the headroom in such environment is limited. The second thing that they spoke about was the distribution. 42% of their distribution is dependent on wholesale markets. They have been trying to increase their direct distribution reach. The last time I spoke to them was about 50%. That has come down to 40%. They do have a plan to go ahead and increase their distribution directly, but then until then, these things will continue to impact the company. The most hurt product in their portfolio this quarter was Kesh King. 100% of that is distributed via the wholesale channel, which has been disrupted. The third thing that they spoke about was their launch of new products and increased market spends. Now they already spend about 16-17% of their sales on advertising. Compare that to 8-9-10% that the others do. So any new launches would entail higher marketing spends as well. So they have exercised all of their levers. It's interesting to, or it'll be very important to see what they do going ahead, given the fact that there is limited headroom available.
All right, Mangalam, thanks very much for that. Numbers for Supreme Industries there flashing for you. It looks like a mixed bag actually this time around, because there's been some bit of shaving off in terms of their margins. They're down to about 15.5%, a little more than 100 basis points cut over there on a year-on-year basis, though profit stable. Revenues have grown about 15% to the 1280 odd crores. Some earnings reactions coming through from Supreme Industries. It looks like a bit of a weak quarter actually this time around. MP Taparia, the MD of the company, now joins in. Mr. Taparia, good afternoon, sir. I understand that your US plant was shut for a considerable period this quarter. As well, raw material prices have strengthened. Is that the reason we've seen that shave off on the margins, and what can we hope to end the year with?
I see, we are very happy with the performance of the quarter. We could increase our volume by 19% in the third quarter, and our turnover went up by around 16%, and our operating profit margin has gone up compared to second quarter by 200 basis points.
19% volume growth. I mean, actually, that indeed is pretty strong. So then realizations came down, is it?
Yeah, but then 19% because there were more sale of plastic pipes, and
right.
in plastic PVC pipe, the value is lower. So overall, the value has gone up by 16%.
So value is up 16, volume is up 19. You're saying PVC prices came down?
No, volume is 19 and value is 16.
Yeah.
But more turnover was of PVC pipe, and PVC pipe was lower value. That's why it was not commensurate with the volume.
What about volume growth in other segments? I mean, segment-wise, actually 19% is total. Individually, the piping, packaging, consumer products.
And I can say plastic piping system, our volume has gone up by 24.75%. In industrial system, our volume has gone up by around 17%. In consumer product, our volume has gone up by 12.75%. In packaging, our volume has gone up by 3%.
Sir, what has been the market share?
The market looks now we are quite optimistic going forward. The first quarter working looks better because we are comparing with the previous year. The previous year, the base was low due to demonetization. The business was in bad shape from 9th November to 20th February. So lower base, in the fourth quarter also, we anticipate a volume growth of excess of 19%.
Q4 volume expectation is 19%. The packaging segment, you're saying volume growth was only 3%, right? In this quarter, the quarter gone by.
Because in our performance packaging film, there was capacity constraint.
Okay.
And protective packaging product also, we had a capacity constraint. So due to capacity constraint, we could not grow volume in a higher way. But now more and more investment are taking place in those segments, and we expect a better volume growth going forward next year.
This is post your capex, you're saying. What is the new capacity that will be added on?
Now we intend to add next year around 60,000 tons of all the product together.
You know, when you say that next quarter also we should do 19%, I mean this quarter we should do 19% volume growth, what will happen to, again, I mean the mix, where will the growth come from? Because if it is again pipes, it is led by pipes as it has in the third quarter, then we'll see, you know, pricing will be lower. I mean the value growth will be lower.
We expect anyway our turnover for the fourth quarter will be 1,550 to 1,600 crore. Overall, our turnover should be between 5,050 to 5,100 crore for the year.
So from this housing space, from the real estate space, you're seeing demand returning. What's the sense you're getting on the ground, sir, about how things could shape up perhaps over the next few quarters as well?
Now, I think the RERA, Real Estate Regulation Act, the problem is now mostly behind us. We are seeing revival in demand from housing and also from affordable housing.
And with this introduction of e-way bill,
They are also
go ahead, sir.
e-way bill will definitely facilitate business, more growth in business of organized players like our company.
You know, in segments like essentially packaging or consumer products, right? I mean, there was a fair bit of the share of unorganized market is pretty large. Have you seen some of that? I mean, and post GST, it may be still too early, but have you seen any move in these two segments specifically to organized players like you?
Actually, in consumer product segment, we have still not seen much shift to favor of organized player even today. But we believe that after e-way bill is introduced, the share of organized player will go up in consumer product.
Okay. I mean, you know, the by far the largest.
And plastic.
Go on, sir. Go on.
Yeah. By far the largest.
No. I was saying that the largest segment for you by far is the piping segment. Could you give us a little bit of I mean some outlook on some color on pricing, etc., margins in that segment, where you see it going forward?
In plastic piping system, our margin will improve to 13.13% this quarter, and we expect it to be better again than last quarter. And plastic piping system, definitely we are seeing shifting of business from unorganized player to organized player. We have seen that we have grown by 24.75% in the volume. So it has shown the shifting happening place in plastic piping system.
All right. Good luck with that. Thank you very much for joining us with the details. Appreciate you coming on, sir. Thank you. That is some color on the results for the quarter from Supreme Industries. The stock, like pretty much everything in that space, be it Nilkamal or this one or I mean, a few others. So 73 points lower on the Nifty, 11,058 is where we stand. TeamLease numbers are at the bottom of your screen. Revenues are, I think, okay, net profits are up a full 100%. 19 crores compared to about 9.5 odd crores or so, the same quarter last year. And I think we are getting the top line numbers as well.
Yeah,
which should
top
be
line is at 922 crores, which on a Y-on-Y basis is a growth of about 13% In terms of their margins, they've improved a tad as well. So almost 2% now, so 1.9% to be exact for TeamLease. So overall, it looks like quite a good set of numbers. I'm just trying to see if there's anything more.
The EBITDA is there, 44.5% growth in EBITDA. Margins are up, as you said, a little bit. But I think, is there a one-off, Sumaira? Because I think...
yeah, so I was just trying to find
the
that.
net is up some 100% or something. Yeah, 100%, almost 100%. 18.5 crores compared to 9.2 crores is what we have. The stock, by the way, has had a phenomenal run. I mean, if you recall, we'd spoken about the business with TeamLease a couple of weeks back. And the story actually is pretty good. But the underlying tailwinds for the business for a company like TeamLease has been pretty good, and expectations have been pretty lofty actually. Well, let's see if the numbers match up to what the expectations really have been, and the run-up really has been, because the run-up has been quite phenomenal, to be sure. So that is TeamLease for you. We'll get you more details in a bit from now. The stock is up just about 1% or so. Let's move on. Bharat Financial will be reporting its third quarter numbers today. Abhishek is here with the key expectations from Bharat Financial. Abhishek, over to you.
Well, Prashant, the key number to note will be the disbursement. You look at M&M Finance, you know, a rural-based NBFC that has reported strong set of disbursement numbers. So expectation of that to continue in the rural economy for Bharat Financial will be seen very closely. Now, analysts are expecting the highest growth in terms of NII and PAT, 41.5% and about 10.5% respectively. Improvement in gross NPA ratio will be positive. Last quarter, it was at 5.2%. Now, the impact of rising interest rate will be seen on the cost of funds. Remember that Bharat Financial is the lowest lending rate based MFI in India right now. Now, as I told our poll on a YOY basis, even on a sequential basis, NII is expected to grow at 16.3%, while net profit is expected to grow at close to 33%. Back to you.
Abhishek, thanks very much for that. Somani Ceramics reporting numbers over there. Our poll had actually thrown up a number of 25 odd crores on the net profit. So 14.3 crores is quite a big disappointment actually. And the stock justifiably now down 5%. It's a 29% in terms of a fall on the bottom line on a Y-on-Y basis. I'll just try and pull up some more numbers for you. We'll have to wait by and see actually what their volume growth has been this time around. And whether or not there has been any bit of expansion in terms of the margins, but just this profit number for now also not looking not looking good at all. Prashant, do you have anything more?
Not really, but I think one can surmise, quickly that this is a business which is completely dependent on the real estate business, and we all know that that business has not been looking up for a while now, for the past many quarters. So maybe it is volume degrowth led revenue compression, and hence showing up in profit. And that is the broad sort of general comment that I can make, but we need specifics.
Spike in their raw material costs, etc. That has gone up on a Y-on-Y basis as well. Employee benefit expenses on a Y-on-Y basis is higher. A tad bit of increase in the finance costs as well. So what we'll do now is we'll take a break and come back in a bit and analyze these numbers in greater detail, because even the top line is not looking good.